Silver just closed at $80.45. But don't let that number fool you. This is the calm before the next big move in the market. Today we break down the silver market using real data. It's not social media hype. I'm going to show you 5 key conditions aligning that most traders completely miss. Silver peaked at $90.39 in early March, then dropped to $79.35 intraday, finally closed at $80.45. This drop was not caused by changes in supply or demand. It was a mechanical move executed in the golden pocket, where institutional shorts had already preloaded positions. Every retail long at $90 became a loss at $80, transferring equity to the institutions. While the fundamental market remained unchanged, over the past year, total silver inventory dropped from 531 million ounces to 341 million ounces, a 35% decline. Registered silver, the portion legally available for delivery, is only 78.95 million ounces against 575 million ounces of paper obligations, giving a leverage ratio of 7.28 to 1. This means for every ounce of real silver, there are over 7 paper claims. The paper price temporarily fell, but the structural tightness of the physical market continues to grow, creating a setup that most retail traders don't understand. Macro factors are amplifying this setup. European bond yields are rising as the industrial economy contracts. The dollar hovers near its historical ceiling around 100. And energy costs are pushing inflation across global supply chains. Silver sits at the intersection of 3 forces. It is a critical industrial metal, monetary asset with thousands of years of history, and an inflation hedge. All 3 demand vectors are active simultaneously, making silver uniquely positioned for a major move. The gap between physical and paper markets is striking. Shanghai silver is trading at around $94, while New York closed at $80.45. This $14 difference is not normal. The Shanghai futures market is in backwardation, meaning buyers are willing to pay a premium to receive silver immediately. The physical market is signaling urgent demand. While the paper market temporarily underprices it, the resolution is almost always the same. The paper market moves toward the physical reality. Timing will determine how this plays out. The upcoming Federal Reserve meeting is the key catalyst. If the Fed signals concern about slowing growth, the dollar could reverse, allowing silver to recover quickly. If the Fed remains firm, the dollar could rise further, putting additional pressure on silver prices. Speculative longs have already been wiped out, clearing the path for the next move. This combination of cleared market, physical tightness, and a catalyst arriving soon. It's exactly how major moves in silver have historically occurred. Structural data confirms the opportunity. COMEX registered leverage stands at 7.28 to 1. Total inventory is at a 12-month low. Shanghai premium remains elevated. European bond yields signal accelerating stagflation. The dollar is near its historical ceiling. Open interest is at 20-year lows, and speculative longs are gone. All 5 conditions are present simultaneously, something that has happened only once before in this bull market cycle. And when these conditions align, silver rarely moves slowly. The market tends to react sharply and decisively. Silver's potential upside is clear. A return to the historical gold-silver ratio suggests silver could move toward $91-$100, even without hitting a new all-time high. The structural setup, macro signals, and physical market tightness all support a bullish scenario. The key variables to watch in the next 72 hours are dollar movements, Federal Reserve language, COMEX inventory updates, and the Shanghai premium. These indicators will give you insight into the next 30 days of silver price action, far better than any chart or speculation. The takeaway is simple. The paper price is temporary, but the physical market shows the permanent reality. Retail traders are often misled by short-term dips, panic selling, social media narratives. But the structural conditions and macro environment tell the real story. Focus on the data, not the headlines, and prepare for the market's next move. The next 72 hours will be critical. And understanding these 5 conditions allows you to interpret price moves without panic or confusion. Silver is positioned for a significant move, and the informed money is already acting while retail waits. Stay focused. Watch the key indicators closely
At
and understand that this is a setup, not a prediction of exact timing.